What's up, everybody? Welcome to Top Growth Financial. Today I wanted to walk you through Netflix because recently I've been getting questions about buying the dip. And there's a couple things we want to look at here. First being the reason the stock price plummeted in the first place. And we really want to look to the earnings report for that, because when you look at the earnings report, it isn't exactly what you would expect when you see a stock price plummet 25% downwards. But when you look at it, they beat their revenues, but their additional subscriber rate was down. It was lower than expected. They expected 8.5 million new subscribers for the fourth quarter, and they only got 8.3 million. But the real kicker was their guidance for the first quarter of 2022, in which they said they're only expecting 2.5 million new subscribers, and that is compared to 4 million subscribers for the first quarter of 2021, so that is down significantly for the first quarters when you compare them side by side from this year to last year. Also, another thing you want to look at is the Wall Street estimates for that. Wall Street expected them to post 6 million additional subscribers for this quarter, but you're definitely not going to see that when they're only projecting 2.5 million. So that is definitely the reason for the recent crash here. But was it an overcorrection, and can we expect a rebound here coming soon? I think this depends on how the subscriber growth trends in the future for Netflix, and if they continue to lead in this field, if they continue to outperform other streaming services such as Disney Plus. Speaking of Disney Plus, Disney actually just released their earnings report, and Disney Plus did exceed expectations on the subscriber growth front, so definitely expect a boost in the stock price for Disney. But my view on this whole thing is that a trend isn't created after one quarter. So one quarter of bad subscriber growth doesn't necessarily mean that that's going to continue on forever. I definitely think that this could reverse itself. Again, like I said, a trend isn't created after one quarter because they've been so consistent over the years in creating that subscriber growth. And also, I don't want to put aside Disney Plus, but I really don't think that Disney Plus competes directly with Netflix. I think that you could have a couple streaming services at once. Not everybody's just going to say, oh, I only want one streaming service. But with that being said, you only have so much pricing power in the market. And I think HBO Max and Netflix maybe have a little more pricing power than other streaming services at the moment, because Netflix does put out cool content like Squid Games and Red Notice, where people are willing to pay the extra dollar to be able to see that exclusive content that is only on Netflix. But with that being said, they did kick up their membership fee, and I will be curious to see how that plays out for them in the future and if they are losing subscribers for that reason. So now I just want to take you guys through the stock chart and kind of show you guys what I'm seeing in terms of the technical analysis and what it might mean for the future price movement of the stock. So first off, the prices fell about 41% off its high to the previous resistance level of the last few years, and now we see that we've built some support in that 410 to 415 range. But if it dropped below 360, maybe to 355, I would put a stop in there, because you never want to try to find the bottom when a stock is falling. You want to kind of find some support and then some further upward price movement from there, and that's when you want to enter, because you could definitely see some potential upside from that point. But you want to see some support first before you just enter a position. So I feel like you could see the support zone a little bit better on the day chart, so that's why I brought this up here. And as you can see, I put the stop at 355 because I feel like that's the point where people will start liquidating their positions. I truly do believe that if it went below 355, that we would definitely see some additional downward price movement. But if it continues in this uptrend here, I think over time, this isn't just a weekly position that we're going to enter here. This is definitely something that we buy and hold for the long term. And you can see that the price target is back up at its high, because eventually I do believe that this stock will hit new highs, but I don't think it's going to be anytime soon. So as you saw with the charts, I do think that there is a lot of upwards price potential for this stock that continues in the uptrend that we're seeing right now. But with that, I just wanted to take you to the tip ranks. I kind of wanted to go over what other analysts are seeing and if it kind of lines up with my opinion. So now checking out the Netflix stock forecast and price targets. You can see that it's a moderate buy with 35 ratings, 17 buy ratings, 15 hold ratings, and 3 sell ratings. The average price target is $521.21 with a 26.23% upside. The high price target is $750 and the low is $342, so you kind of have people on both ends of the spectrum there. So reflecting on the tip ranks, I definitely think that that average price target is a reasonable price target to have for the next 12 months, as long as we see that uptrend continuing. And I do think that if you continue to buy and hold Netflix for the long term, no matter what, that you're going to be happy with that investment. So that's all I got for you guys today. Thank you for watching this video. If you found it helpful at all, I ask that you would just punch the like, subscribe button because that would in turn help us out. And I ask that you would just enjoy the rest of your day. Thanks, guys.